Welcome to Bears in Exile. Today is July 10th, and we're going to be doing the balance of the weekend market overview. We'll be looking at the VIX, XOI, TNA, UUP, FXE, GLD, and SLV. And we're starting off with the VIX. We'll see on Friday we had, it started out really nice and just fell the whole darn day. And a big red, ugly, what would normally be a continuation candle if it was going in a straight line. We have this green right here in the middle, but overall, at first glance it looks bad, but on the other hand, it is higher than the candle from the prior day, so actually it's kind of good. We do not have an uptick yet. It's really close, but we don't have it. MACD is still pointing down, MACD histogram ticking up, RSI ticking up, stochastic ticking up. So we're just waiting on earnings and NDEs, which are flying like crazy this weekend with the bad Euro news. So will earnings be able to rescue it? Well, we're going to see in the morning what the VIX does, and I tend to believe that it's going to be a good bit higher, if not a minor gap or something. So, but we shall see. Overall, with the secondaries all being mixed, there isn't much of anything to say until we get that uptick, and we're real close, but we just are not there yet. XOI, we have a hammery looking structure here. The body is kind of big for it to call it a hammer, but nonetheless we can see that it is decelerating. We do not have a downtick yet. We do have this hammery looking deal. Look at all the extreme separation and bubbliness of the short-term moving averages. This thing is just begging for correct the bubble move, and then it can decide to do whatever the heck it wants. Stochastic now pointing down, getting below the 80. RSI right at the 70 pointing down. MACD histogram ticking down. MACD itself still pointing up. So I don't think that oil looks very good right now, but we're going to have to see. Now for the real heavyweight, TNA, and not a island reversal, whatever, like the down SPX. So we have maybe just a hair of open space that hasn't been filled, but this is not a clear candle of any direction. This has had the highest momentum of anything, and you can see all of the excessive expansion, the bubbliness of the short-term moving averages. This is also begging for a bubble corrective move, and MACD histogram ticking down, MACD still pointing up, RSI and stochastic ticking down. Not much to say about that. It had great movement pretty much the entire day on Friday. So if the market's really going to break, we're going to see it in TNA as the Russell breaks down. So that one I'm watching very, very closely. Going on to the really important things, UUP. Now this is really interesting. We don't have a candle of any real significance. We talked about on Thursday that we have the bearish bar. It was trying to work on it. It was underneath it and pushing it out. We saw that on Thursday. It pushed it right out as it tried to make some headway. And on Friday, wow, it actually pushed back and made some headway, and it's inside of the bar now, and will be taking damage. So this is very interesting that the force should be with the bar pushing things out, and it is working against it. So beyond that, looks like we're going to have a crossover of the MACD to the positive. MACD histogram ticking up, RSI ticking up, stochastic ticking up. This looks very bullish to me, the dollar, at least for the moment. And with the news that's coming out over the weekend, certainly that would also support an up move in the dollar. So the chart looks good. The news for it is good. I'm definitely saying that the dollar is positive at this moment. Definitely has odds in its favor. FXE, the euro, have sort of a hammery looking formation. Actually, the body is too big, the top is too long. and but you'll see that the bullish bar still, we were talking about how it is almost non-existent. Now that the short-term moving averages are going back into it, it's going to take further damage and probably go into a flat line. Beyond that, stochastic pointing down, RSI pointing down, MACD getting the cross to point down, MACD histogram ticking down. The euro looks bad. And last time I checked tonight, we were right at 1.421 on the euro, $1.42.1, and which is a big move down. And we've had big moves down, and the market has not followed that. So very interesting. I do think that once we get into the 1.43s, and that's going to spook some of the market. And if we get down into the 1.42s, woo! Now that's going to be something. So anyway, watching this one very closely, it does not look healthy at this moment. It was trying to get back above the bar, which would have been positive and strengthened the bar, but instead it is clicking down. So doesn't seem to be any let up on the secondaries, and so definitely euro bad. GLD. Talked about in the last couple of videos that the move up in gold correlates with the VIX, probably with gold being a at this moment a more accurate indicator, as the VIX hasn't been doing too much, but in the area of fear, but gold certainly has. Look at this gaps. 1, 2, 3 gaps, big gaps, and we're now above the major price consensus level. You can see that it started out high, it moved a little bit lower, and it's sitting right on top of it. If it can stay on top of this, that is bullish, and if it maintains that, then certainly it is likely to go up to 151. If it breaks out of 151, then we probably do have a breakout on gold. Do these gaps concern me? Not really, but certainly as a fear factor, gold is certainly telling us way more than the VIX. We have a new crossover, bullish crossover on the MACD, histogram ticking up. RSI is still neutral. Through all of this, RSI is neutral, and stochastic very high, so not too shabby, and it still does have room to move before hitting the upper Bollinger Band. And but is it going to come up and do a new high? I don't know. With the dollar going up, is that going to put some pressure on gold? You would think that it would, but the correlation certainly is nowhere near perfect. So not a bad looking chart though at all. From a guppy perspective, bullish bar, very bullish, comes down, tests the bar, comes back out through it. Once we have complete crossover and separation on the short-term moving averages, that's a guppy entry. So will it come up, need to come back and kiss the bar and then bounce off? It could do it either way. You could say that this is a kiss of the bar, and this after this run back here, but that looks good. We'll be watching for the separation and expansion. And SLV trying to follow gold, have some crossover on the short-term moving averages. The bar is not really there to deny it. We do have a hammer on Friday. Stochastic very high, RSI still essentially neutral, and we have a crossover positive on the MACD with the MACD histogram ticking up. There simply is not enough data here to say if this is going to be good for silver. Certainly there's next to no volume. The upper Bollinger Band isn't that far away, and we'll need to get all the way through what's left of the bar and get complete crossover and separation to have a guppy entry. This is far too early to make any kind of call or speculate on that. And there you have it. There is the touch-up to complete the weekend market overview. I will be on the road this coming week. I will do my very best to get videos out every night. I don't know if that will be possible, but there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.